Income Tax 2020, Practice Problem 1, Presentation 38, Child Tax Credit and Other Dependents Tax Credit. Come in, relax with Income Tax 2020. Here we are in our Lacerte Tax software. You don't need the Lacerte Tax software in order to follow along. However, I do think they have a 30-day free trial. So if you can get access to a promo or demo version of it or any other tax software, could be a good tool to practice with. We're going to be continuing on with our Practice Problem 1 comprehensive problem. In the first section, we put in the information related to the total income, then information for the above-the-line deductions or adjustments to income, then the below-the-line deductions or itemized deductions, and then we added a Schedule C, which kind of messed everything up, but then we reconciled the Schedule C and everything, and now we're going to be focusing in on the income items, which are in essence on page 2. They're going to be in there along with basically the payments. If we look at our tax formula, then of course we're talking about these items that are basically down on the bottom half of the formula. Remember, we're getting down to the taxable income up top, and then we're going to have the credits at the bottom because they're going to have the same kind of value to the formula as the payments would, as opposed to the deductions up top, which are still good. Credits and deductions are typically good things for taxes, but the deductions would not have as much of an impact if they were the same dollar amount, due to them only having an impact related to how much, the tax rate will be. Whereas the credit, you're going to get basically the full dollar's worth of benefit for the credits that you will be receiving. So we're going to start off with the most common kind of credits. That's going to be the child tax credit and the other dependent credits. So we didn't add any dependents yet when we started the problem. We're going to add the dependents basically at this point in time. What we have now is a married tax return with 2 individuals in it. Now, obviously, normally you would put the credits in there basically at the start of the tax return. They would be rolling over from the prior year if you had input the data into a prior year tax return, in this case 2019, and then they rolled it over into the current year. And you'd only basically need to be adding dependents if they had like another child came along or some other dependent happened at some point along the way. But here, for us to go progressively through the problem here, we're going to be adding the dependent at this point in time. So we're going to add 2 dependents. One is going to be a child under 17, qualifying child, so that we should be seeing the child tax credit if they're not hitting the phase-out limitations. And the other, not a qualifying child, and we're going to put a student involved so that they'll also be going to school. So they'll get, so we're looking for education tax credits with relation to them, as well as the other dependent credit if possible. So that's going to be our objective now. So we're going to have the 2 individuals here that are going to be popping up for the dependents. And then we're looking at what benefits we can get from that. The primary or most obvious one being the credits related to them. Okay, so we're going to go back on over. We're going to add some dependents. So first one I'm going to say is Sam Smith, and date of birth, we're going to say 03/17, and we'll make it 18, 03/17/18, that should work. And then there's still alive, that's good. Adopted social security number, I'm going to just say 44444, and then relationship's going to be the son. And we're going to say that this is going to be lived at home for 12 months. And child living with the taxpayer, going to hit the earned income credit when applicable. It won't be here because our income's too high. And then the child tax credit, and that's good. Dependent claimed by the taxpayer. Okay, I'm going to say that is good. Let's go up top and check it out. So if we then go up top, now we got the married filing joint status. We got the spouses up top, living in Beverly Hills 90210. And then we have the Sam Smith here for the Social Security son, and they qualify, Sam does, for the child tax credit. So the major difference then being on the second page, now we're going to say, let's see what that child tax credit is worth. We got the $2,000. So there's the $2,000 on the child tax credit. And so we're okay with the phase out. So we didn't get any phase out limitations. So we got our $2,000 child tax credit. Here's the calculation for it. All right, we're going to add another child. We got a second child. But they're over 17, so they're not going to qualify for the child tax credit. But they're a student, so we might get that, and we might get like the other credit, and that's going to be Amanda. We'll say Amanda Smith. Amanda Smith. Date of birth for Amanda, we're going to say 12/27, and we're going to say 1999. So that means Amanda is over the 17, not a qualifying child, over 19, but she's going to be a full-time student here, so still able to be claimed as a dependent. So the date of death is not applicable, and social security number we're going to say is 777777, and then the relationship is daughter, and lived with the taxpayer, we're going to say, we'll say yes here, so that is it. Let's bring it on over and see what happens. Let's go to the forms then, and if we go then to page 1 of the 1040 and start it off there, we've got Eric and Jane living in Beverly Hills 90210, and then we got Sam Smith and Amanda Smith, and then Sam qualifying for the child tax credit. Amanda does not because Amanda's over 17, but still qualifies as a dependent due to the fact we're going to say that she's a full-time student, and therefore we got the credit for the other dependents here. So if we then go on over to page 2, and we could say there's our 2,500 calculation for the credits. And so if I open this up, the 2,500 for the credits, so there we have that, and that looks good. Now, the thing that's kind of interesting on Amanda here, you might say, well, Amanda is a full-time student, and if she were independent, we're getting a $500 benefit, and then we'll take a look at the education credit, which will kind of be related to Amanda. But if Amanda was not a dependent, if she was independent, she may qualify for the stimulus payments that went out in 2020, and in which there is a credit for, that is the recovery rebate credit, that for people that didn't get that payment in 2021. So if you had a situation where someone was a student or a dependent before, and for whatever reason now they're independent, and if Amanda here was independent, filing her own tax return, then you'd think maybe she would have been able to access the economic impact payments or the related credits for them, which would be the recovery rebate credits. So that's just something to kind of keep in mind in 2020. We'll take a look at the benefit. You can see the benefit here as a dependent is going to be the $500 for the credit, and if she's got the tuition and whatnot, then the expenses related to the tuitions may qualify for the education credits, which we'll take a look at shortly.